Hey, moneymakers. Well, we're having some technical challenges tonight. Hey, moneymakers, welcome to another episode of Taking Stock Live. I'm your host, Kalilah Reynolds, and we're bringing you all the latest business news and telling you how it will affect you and your money. And boy, there is a lot of business news this evening. A lot of things are happening, shaking up the market. We're starting with a big acquisition by 1GS acquiring DRT Communications. We also heard today that Dolphin Cove's parent company has filed for bankruptcy. So how does this affect the local operations and U.S. shareholders? We're also going to be talking about Mayberry's latest bond offer and meeting the company's new CEO. And then later in the show, I tell you, it's a packed show tonight. We're also going to be looking at some of the stocks to watch for 2025. So if you're hungry, grab some snacks. We have a lot to talk about this evening on our show. And of course, let me know in the comments, what part of Jamaica or what part of the world are you joining us from? We want to know so we can shout you out. Now, here's a look at what's coming up in tonight's show, followed by what's hot in business. And come on, let's get this money. On this episode of Taking Stock, breaking money news. A huge acquisition is taking place and we have the scoop. Get the news first on Taking Stock. Mayberry has another big bond offer on the market. Is it right for you? And the analysts weigh in on the latest market development. It's been a busy week for the microfinance sector. What's going on with ISP Finance and Dollar? Plus, which 4 local stocks should you be keeping a close eye on right now? We'll discuss.
But first, here's What's Hot, brought to you by JMMB Group, your best interest at heart.
Jamaica's government plans to spend less this financial year based on the 2025-2026 budget. According to Finance Minister Favour Williams, the government plans to spend almost $1.3 trillion this year. That's 9% less than last year. The minister said just under $1.1 trillion of national budget will be financed by taxes and other receipts, while loans will be used to make up the $158 billion shortfall. About $1.2 trillion will go towards recurrent or day-to-day expenses, while $62.5 billion will be spent on special projects and capital expenditure. According to Williams, the smaller budget is because the government is spending less on debt servicing. By the end of March, Jamaica's debt to GDP is projected to fall below 70%, the lowest in 30 years. Kingston Properties has expanded its footprint to the United Kingdom after acquiring an office building in Bristol. Cape purchased the 20,000 square foot property through a $21 million loan from CIBC Caribbean. The building is already fully tenanted and is Cape's first step into the UK market. Outside of Jamaica, the company has properties in the Cayman Islands and the United States. The Sagicor Foundation says it raised 128 million Jamaican dollars from Sunday's staging of the Sigma corporate run. That's about 813,000 USD. The original target was 115 million Jamaican dollars. The foundation said a record 30,477 participants registered for the 27th staging of the event. The funds will be donated to Kingston Public Hospital to support critical improvements to its intensive care unit. The Sir John Golding Rehabilitation Center and Father Ho Long and Friends Foundation's Bethlehem Home are also recipients. Sagicor said Sigma Corporate Run has now raised more than 875 million Jamaican dollars for close to 30 charities since it started. Caribbean Airlines profits dipped over 50% in 2024. The airline recorded an operating profit of $12 million last year, down 51% from $24.7 million in 2023. According to the company, increases in maintenance and handling costs as well as flight security were major factors in the decline. Despite the steep drop, the airline's 2024 numbers are still a massive improvement over the $37 million loss it recorded in 2022. The airline also recorded a 5% bump in revenues to $445 million in 2024. Guyana's government says it plans to build 12 new state-of-the-art hospitals by 2028. President Dr. Irfan Ali said 6 of the hospitals will open by the middle of this year and 2 more by 2026. The country also plans to open the Caribbean's first pediatric and maternal hospital, which will focus solely on maternal and child health care. President Ali said the country's telemedicine services are also growing, with 84 sites operating. Over 3,700 healthcare workers have been trained in the last 3 years, with another 3,500 in training.
What's Hot was brought to you by JMMB Group, your best interest at heart.
Hey, you! Yes, you! Come here! Have you ever wanted to start investing but you just don't know how? Well, you gotta take my beginner money masterclass. I'm gonna give you a video course on how to start investing. It also comes with an ebook that you can download and read at your leisure. I'm giving you my personal investment tracker spreadsheet. It's gonna be filled with quizzes and guides and exercises. Go to investingforbeginnersja.com to get started. Let's get this money.
Let's get this money.
Welcome back, everybody. Apologies for the late start and some of the technical glitches that you've been noticing so far in the show. Oh, it's just like, and then you also heard my voice in What's Hot. So earlier when I recorded that, my voice was kind of in and out. Fortunately, it's back now. Just a bunch of things going on. But let me see who is joining us and what part of the country or the world you're joining us from. Let's shout out the money makers. It's shout out time. Big up to Dwight in the house as usual. Kish sending greetings to everyone from London. Nana Sense watching from far, far away. Strong Link saying good evening to everyone. Orlando is joining us from Grange Hill. Omi is in Jacaranda Home, Spanish Town. We got Erd Nati, Kingston 6 in the Hizzle. Strong Link joining from Upper Manor Park, not lower in Upper Manor Park. We got Humble Boss checking in from the Grill. Who else do we have on the program tonight? We have Unbothered Chico in Maypen, Clarendon. Malik is in Massachusetts. Sebastian is in Connecticut. Michael is in Portmore. Kish in London. Richard Bell in St. James. We also have Ochi in the building. Wyoming checking in. London in the house. Maypen in the house. Mona in the house. And California in the house. So we love to see the diversity, everybody who is watching us from all over the world this evening. And what a show it is. What a time to be watching, because so many things are here for us to discuss, starting with the big news of the day. 1GS, that's One Great Studio, has acquired DRT Communications. And joining us now to talk about it, we have the founder, co-founder of 1GS, Javain. What's Javain last name again? Brownie, and Daniel Terrelong from DRT Communications. Welcome, Javain. Welcome, Daniel.
Hi, Kalilah.
Hi, how are you?
Not as good as you.
We are good. We are great, actually.
Clearly, One Great Studio times DRT is about to make a big impact in the market. But Javain, you're the one doing the acquiring. So you walk us through this. How did this acquisition come about?
Well, it started last year at the Super Bowl, actually. Ryan and I were at the same Super Bowl party, and he kind of approached me and said, I have an opportunity that I think is good for you. And, he shared some documents with me. And since then, we reviewed, we met Daniel, and it's been a year of getting to know Daniel, the team, the business, understanding the business. And, we're just really excited to be here now. 1 year later, almost to the date. Super Bowl was last week, right? Mm-hmm. And here we are, completing our acquisition.
Which Ryan is that? Ryan Strawn?
Ryan Strawn from Sweat Equity Holdings.
Ew. So yeah. He's the one putting together this whole deal.
It is.
Ryan was the lead arranger for it, yes.
Big up yourself, Ryan. Now, Javane, it's been, what, 2 years now since you guys did your IPO?
Yeah, I think we were
2023.
listed in September 2023. So
So
almost
less than 2 years, like a year and a half.
Mhm.
And this is your second acquisition
It is.
in
It
as
is
many
our
years.
second position, yeah.
So I'm
First one was done
assuming,
before we IPO'd, right? So this is our first since being listed.
right. So are acquisitions a part of your growth strategy then?
Yeah, it is. It is. I mean, I think the way that we see ourselves, we see ourselves as a host of brands, right? With different brands focused on different niches in different locations. And so for us, like a big part of how we want to grow is that we want to have all these different brands specializing in how they serve their clients with a powerful back office that runs everything, right? So one centralized place running the business with different brands serving different niches. And that's a big part of how we plan to grow. But it's not going to be where we get all our growth from, but it's definitely a part of our strategy in terms of building out multiple brands, because we think when it comes to agencies, it's good to have different brands that focus on different things. The teams can be specialized, and then we can work together and serve clients seamlessly.
Okay, let's hear a little bit more about both of the companies, because you are a junior market listed company, 1GS is, and you're fairly new to the market. There may be some people who still aren't as familiar with you. So 1GS, I know you as a marketing agency primarily. DRT, you're a public relations firm, and DRT, Daniel, you were on this program just a few weeks ago, showing us your proprietary media monitoring system, which is pretty cool. So Daniel, let me ask you first to just explain who DRT is, what you guys do, and how do you see yourself fitting into what 1GS does and their growth trajectory?
For sure. Thank you again for having me on this evening, Kalilah. It's always a pleasure to be with you. So DRT Communications has been operating for 17 years. We are I'm going to say, the leading public relations company here in Jamaica. And of course, we have our media monitoring technology, which is monitoring and tracking and giving data-driven analysis, data that marketing managers, CEOs, CFOs can use to determine their marketing strategy, their communication strategy. We also see clients who come in with a potential crisis as comes up from time to time. We are able to get in action right away and understand what is being said in the media at all times in real time. We have an amazing team of creatives, storytellers. I always say I am not the CEO, I am the chief storyteller of a group of amazing, talented individuals who work with, traditional media, online media, to ensure that our clients' brands have the widest possible reach. We work on several IPOs. We've taken several companies public. So that is a niche that we work in as well. We work with companies on their quarterly results. We tend to niche quite well in the business part of business PR. Because we're really, really good at it. But at the same time, we also work with fast-moving consumer goods and other brands as well.
Which is why you and I work together all the time.
Right. Exactly. And so you asked, why with One Great Studio, and for me, the biggest answer is, you can grow alone. Someone asked us earlier why, DRT could stand on its own, but you can grow alone, or you can grow as a team. Two strong entities can come together with a shared mission and a shared vision. And that is what attracted me to having a conversation with One Great Studio, Ryan Strawn, having brought the opportunity to us. We realized that they too were looking at Caribbean expansion, expanding services in Jamaica. Our ability to even cross-sell now to our existing clients, right? So what's important about this transaction is that the entire DRT team that our clients, have come to know and love, we are all now a part, fully employed to One Great Studio. And we are bringing our expertise in that space into the One Great Studio team and can now offer our clients even more. And I guess I'm going to speak for Javane here. He will also be able to offer his clients even more services. But this is an alignment of culture, of vision, of mission, and certainly of company and business values.
All right, so that's where I was going next. So, Javane, what exactly have you acquired in acquiring DRT? Because Daniel says they're now being employed by you. So, you're acquiring their technology and the team?
Yeah, so it's what you call a sale of business. So the business continues, but on a new entity. One just is a listed entity, and so what you want is you want the listed entity delivering all the value, right? Because that's where your tax benefits are. So the entire DRT team will come over to OneGS, and then we would basically start operating a new business line with DRT. So we'll have a new PR media monitoring business line with the acquisition of DRT. Kalilah.
Daniel, as the founder, is there a time limit on you being with OneGS, or how does that work?
Well, as far as I know, according to my brain and my heart, I plan to be there for as long as One Great Studio wants to have me. As I said, this is not just a transaction for DRT. This is a bringing over of our talents and our giftings to really offer more to grow as one. So as head of division, no longer managing director, as I've been introduced as before on this show, as head of division, it is my goal to continue to work with the One Great Studio team on a combined trajectory to just amazing growth. It's, as you know, we keep saying, it's a great thing.
But there was a time when you were mulling your own IPO.
Yes.
So what changed?
You know, a lot of people are asking me that same question, and that opportunity did come up to us for on a few occasions, and I had spoken with you about it being a dream. But you know, life changes, and when an opportunity like this comes up, you get to partner with. I consider this, you know, yes, it is a sale of business. The brand of DRT Communications will still remain. And as we've said a few times, the team still remains. But when you combine and go in partnership together, you can grow and expand so much more. You know, one of the great things, definitely think I'm speaking for Javane here, is that we are integrating already seasoned teams. We don't have to like grow another entity or grow a business line from scratch and start. We are already operating in excellence in both entities. And so really it's just catapulting forward from here.
So Javane, the sale price is 115 million Jamaican dollars. And the deal also includes a $35 million performance-based earnout over 3 years. Explain what that means and how you guys are funding this acquisition.
Yeah, no problem. So what that means is that the guaranteed price then is $80 million. And based on performance targets in year 1, 2, and 3, there'll be different payout should the business line hit those targets. So it's built in such a way that we have that the DRT team has certainty, but also upside there. And it's built in such a way as well for our shareholders that there's protection there should the transaction not pan out the way that we expect it to. Even though we expect it to, because we have a clear planning path to get to where we want to go. So that's how it's structured. So there's $80 million, and that's been funded through cash reserves, no debt coming on, because we did raise funds in our IPO. We have generated cash flows every year, and a big part of what we have done is positioned ourselves for opportunities like this, and even more to come as well, because we still have additional resources left, and this won't be our last. And we've said it before, we're going to keep transforming this business. Our objective is to be the largest, most capable, most profitable agency in the Caribbean, and this helps us to get there.
Funded through cash reserves, no debt, must be nice.
And yeah, I mean, we people asked in the IPO, and they said, "What you going to do with this, Cat?" We said we're going to clear our debt, right? And we did that. We cleared our debt. That was a big chunk of it. We generated more cash since then. And when you run an agency, agencies are supposed to be capital light, right? You're supposed to be able to generate profits. You're supposed to be able to generate cash flows. And so that's what we're seeing in OneGS, where it puts us in a position where we can make a move like this, and still in a position where there's more ahead as well.
So, question from Sean online. Sean wants to know, what can shareholders expect from this partnership in terms of growth in the OneGS and its top line and bottom line? So how will this acquisition affect your performance?
Well, I can't tell you the exact numbers, but what I can tell you is that 100% of the revenues will be added to our top line. So we do expect to see a growth in top line, and we do expect to see a growth in our bottom line as well. So for us, we're seeing this as a strategic move. It's not just about the revenue. It's also not the immediate revenue, but it's also about the long-term revenue. At 1GS, we're don't be greedy, think long-term and do good. And we see this as a long-term strategic fit that will have an immediate impact on both the top line and bottom line.
And just to give our viewers a sense of the numbers, in your most recent reports, you have $261.5 million in revenues, and you also had net profits of $30.6 million, and that's for the 9 months ending September 30, 2024.
Yeah, so we haven't published our full year yet. That's upcoming, so we'll be publishing our full year audited coming up soon.
Jordan wants to know, when is the next dividend payout?
That's a good question. I mean, our board meets soon. We'll see if we have a consideration at that time.
All right. I need to try screen some of these questions. Yeah. So Daniel, I can imagine that this is a very exciting transition period for you.
Yes.
Sometimes when founders essentially sell their company, they want to move on to the next project, but that's not the case for you. DRT is your baby. And so now working with this new or under this new company, under 1GS, does that bring you any type of fear, thinking about, okay, we're changing strategy, we're changing focus, we're going to be expanding to markets? How does that make you feel?
To be very honest with you, absolute honesty, it is actually extremely exciting to me. I've said a few times, this is not just a transaction for DRT, it's a growth opportunity. And yes, DRT is my baby. Everyone who has followed my story knows I started this in my bedroom. I started it on a prayer, literally, 17 years ago. But to know that we are in good hands. You called it my baby. I know we have a great parent. We are a part of an organization that is, we spoke earlier about their cash reserves. So we have opportunities to grow. We have opportunities to take on even larger projects because we're going to be a part of an expanded team. We're going to have an opportunity to offer, a wider variety of services while still being true to who we are. We are going to be called DRT Communications as a business line of One Great Studio. I just saw a question come in on the screen. We are still operating as DRT Communications, a business line of One Great Studio. You asked a question. I felt extremely proud when I was asked to sign a resolution that One Great Studio would have the right to use the name and the brand that they saw, the brand DRT Communications.
I felt proud of you when I heard it.
Yeah, it really was a very warming moment for me personally. And it was a big thing for my team when I was able to do that, because the thing about it is, I may be the face of the company, but there are 18 individuals who make everything we do for every single client, every IPO that we do, every quarterlies. We've worked with every brand that you can think of: Red Stripe, Red Bull, JPS is a big client, Ria Nevia, KFC. We've worked with, so many clients along the way. And that is not just me. That is a group of 18 people, and truthfully, 70 employees overall over time. More than 70 employees that have been a part of the growth, that have gotten us to this point. And, as somebody said to me recently, Daniel, never forget you have an army of supporters, and that includes amazing clients, an amazing team. And now we have an amazing parent. The process, this transaction, I'll tell tales out of school. The attorneys actually said if every transaction could be so, I don't know if they use the word seamless, but, we did it with ease and grace and respect. And it was just a fantastic process. So to give up my baby, I'm there for the ride. I'm there for the growth. And I just see amazing things ahead. I guess I should be cliche and say, I see great things ahead.
I love to see it. I'm going to take two final questions from the audience. This one is from Sean, who wants to know, Sean is all up in your business, does DRT have debt on their books that 1GS will be taking on?
I'll answer that question, or would you like to, Jivay?
No, you can go ahead.
One Great Studio will not be taking on any debt from DRT Communications in this transaction.
Okay, and last question comes from Tavares, who wants to know if the transaction includes any form of share issues.
At the moment, not quite at the moment yet. Maybe that's something in the future, but right now it's just a straight cash deal. Daniel will come over as an employee. We see her as a big part of our team, adding to our team, building on the culture that we have right now. And so that's something that, maybe down the line, but right now it's a straight cash deal.
Ryan, your arranger.
Well, another big thing here is that this is a deal that's coming out with no dilution for our shareholders as well, which is also a big deal as well, right? So for us, we're really excited about this, and we just can't wait to see how it unfolds.
Yeah, big up your arranger, Ryan Strawn, who's watching, says good times and good people. And I did say last question, but this one is good as well. So Kenton wants to know, is there any reason why the stock price has been falling?
I mean, the stock price, Kenton, it means you need to buy some more 1GS stock because a really good price right now.
Good answer.
I mean, also one of the answers to that, if I can jump in, as certainly no analyst on this call, and I know you have many analysts behind me, is that, the overall stock market has not been performing as, we knew of a time in 2018, 2019. So I don't see where One Great Studios shares or stock price has fallen, out of tandem with generally what's happening in the stock market at this time. So as Javain said, it's actually a really good time to buy. And as Kalilah would say, let's make this money.
Mm-hmm. Well, thank you so much, Javain and Daniel. Anything that you want to add before we go?
TT?
Well, we just saw Ryan there, and I just want to thank him. We were represented by Ryan, Myers, Fletcher, and Gordon, Sanya Goff from Hart Muirhead Fata. As I said, we have had an army of supporters behind us to bring us to this deal. We have, amazing clients who, when I told the news, were, just really, really excited and really looking forward to offering just a really, really amazing suite of services, great synergies between the teams. And, it really is a humbling moment for me. And I'm just super grateful at the partnership and the alliance that we have created through this entire process.
Last word goes to you, Javain.
Yeah, I mean, I'm just grateful, Kalilah. I mean, Daniel has been awesome throughout the process. I think we are getting an awesome leader with her joining the team. I call her a rock star. And we're just committed. We're really committed to growing this business and to making sound decisions and moves. And this is something, it's one step. And there will be more steps in the future. We have a bright future ahead, and we are really looking forward to growing this company for the benefit of everybody involved.
Wonderful. Thank you so much, Javain. Thank you, Daniel, and all the best under your new roof, under the new arrangement. 1GS DRT are now one even greater studio. So let me take a few comments before we move on. Inga says it's time to buy the dip. We have Raquel saying, like and Comeen team. Sean Brown says, no debt, all profit. Nice headline. What a deal. And then he says he can't wait to see the financials. Before we get into our next conversation, it is time for us to do our poll question of the evening. So Usain Bolt has been making headlines once again. What do you think about his comments that the government needs to do more to help him to recover his funds at SSL? How do you feel about that? A, he's right. The government does need to do more. B, that's not the government's responsibility. C, leave it to the courts. D, other, leave a comment. Let us know what you think. What do you think about Usain Bolt's comments that the government needs to do more to help him recover his funds from SSL? Is he right? The government does need to do more. Is it that that's not the government responsibility? Should he just leave it to the courts? Or do you have another take on the situation? Let us know in the comments. You can also take that poll over on Twitter or on the community tab of our YouTube channel. It will go out via email tomorrow morning as well. Switching gears now, you've been hearing all about the Mayberry bond for the past, 2 years now. They have been on a roll with their bond offers, and there's a new one out right now. But tonight we're also meeting their new CEO. So Mayberry has a new CEO. Mayberry Investments, to be specific, has a new CEO. He joins us right now. His name is Patrick Bataille. We're also joined by Senior Vice President of Investment Banking at Mayberry, Dan Theok. Welcome, Patrick. Welcome, Dan.
Good evening. Thank you for having us.
Good evening, Kalilah. Good evening to your guests.
Great to have you, especially Patrick, since this is your first time and our audience is now meeting you for the very first time. So Patrick, give us some background on yourself. How long have you been in business? How did you come to Mayberry?
Sure. A great question. So I've been in business for over 25 years, starting my career at a company most people won't remember, a company called Donaldson, Lufkin and Generitz, which was a power investment bank. Moved around quite some time. I went to TD Waterhouse, which is now TD Ameritrade, focused on sales and relationship management for the southeast of the U.S. And then spent 11 years at Citi in a myriad of roles, from investment banking to running their pension business in North America, to being the number 2 person in their alternatives business prior to selling that business, and then doing strategy advisory for what used to be Booz and Company, and then ultimately, more recently, with Bank of New York Mellon as one of their global executives in their $8 billion business. What brings me to Mayberry, great brand. I've known Chris and Gary over the years. Wanted to pick up the torch and carry on the tradition of innovation and being a market leader.
So you've been doing, so your background, your history is mostly in the United States. Do you have Jamaican heritage?
Yes, I do. So most of my background has been in global markets. So I've been based out of New York, but for instance, at Citi, I covered 98 different markets. At BNY Mellon, 92 markets. So there are a number of different markets that I've had experience in. While at Citi, I did have a marquee client here in Jamaica that we did cover, partnering with Citi locally. So familiar with the market.
So have you relocated here, or you're working remotely?
I am relocated to Jamaica. Ironically, I'm traveling this week, so I'm here in Florida, but 99% of my time, I'm 2 doors down from Dan.
How are you liking it?
I'm loving it. I've inherited a great team, partnering with Gary on some new investment strategies and approaches to the market. So it's a great opportunity. Looking forward to disrupting the market.
It's a different pace than what you're used to, though.
It is. And I'd say, it's a mix. I think my team is getting used to my pace. I'm getting used to them. There's an even balance.
Where do you see the opportunities in this market?
So in this market, I think there's a lot of opportunities, particularly around investment banking and asset management. I think there's a lot of opportunity, which your show does, as well as our investor forum, which is educating a new generation on investment opportunities in the market.
I see a couple people asking you. I don't know what this is, but let me ask. Philip says, "Big up, Patrick. We want to know more about Keo World." I saw somebody else post that as well. What's Keo World?
So Keo World is a company I sit on as an advisor. It is a digital wallet company. So basically focusing on what I would consider capital financing upfront. So you don't actually need a bank account. You can actually send money from anywhere in the world, and Keo will distribute the money on your behalf through a digital wallet.
And you're still involved with that project?
Yes, I still sit on the board of advisors.
Okay. Philip, what else you want to know? Speaking of opportunities, though, because I asked you what are the investment opportunities and opportunities in general that you see in this market. Let me bring Dan in on that one, because Dan, that's what you do. you study the opportunities and you make your move when the time is right. Right now, you are promoting your new bond or your latest bond offer, which is at 10.25%. Why are you coming to the market again?
Great, good deal. So, as you said, 2 years ago, we sort of pioneered the idea of doing a bond IPO, which is to make fixed income instruments available to regular retail investors, because we know there's like about $1 trillion of deposits out there with the various financial institutions, and interest rates being paid on these savings accounts are ridiculously low, 1%, 2%. In any given year, we will raise 15, 20, $30 billion of fixed income for our clientele. And it's usually done, Kalilah, as you know, to high net worth individuals only. So 2 years ago, we thought to ourselves, we should try to make this available to regular retail customers in much smaller blocks, because when I'm doing the accredited investors, the minimum investment in a bond would be typically $1 million or $10 million Jamaican, depending on how we structure it. So we did this 2 years ago, $6.4 billion. And we did it in 4 tranches. There was a 13-month tranche, an 18-month tranche, a 24-month tranche, and a 36-month tranche. So 4
Hold
tranches.
on before you continue, Dan. Philip, are you seeing Dan on the screen? Or is it just you on the screen right now? All right, there we go. I think our producer dropped off just now, so we weren't seeing the full thing. All right, Dan, go ahead. You're talking about the bond?
Yeah, good deal. So when we did it 2 years ago, we had 4 different tranches with 4 different tenors, 13-month, 18-month, 24-month, 36-month, and it's a $6.4 billion collective program. So this is the 3rd tranche, the 24-month tranche bond. It was $2.3 billion, and we're just looking to roll it over. So when we did it 2 years ago, the interest rate was 11%. Interest rates have trended down a bit over the last 2 years, and so now we're rolling it over at 10.25%. So once again, we're giving folks the opportunity, regular retail investors with as little as 20,000 Jamaican dollars, they can invest into this corporate note and earn themselves 10.25% per annum. From Mayberry's perspective, it's a way of raising funding that we can then use to on-lend to our clientele. So we're raising funding from one set of clientele to fund our investments in our loan book for our other high net worth individuals.
The BOJ's policy rate is now at, I think it's at 6%. So you're still significantly higher than the BOJ's rate. Like, how are you able to sustain that?
Yeah, so we're comparing apples and oranges. So first of all, the Bank of Jamaica is sort of the risk-free rate. And then the 6% rate that you're referring to is the 30-day CD rate. So 30-day CD rates in the last 8 months have come down from a high of 11% now to 6%. So that's 30-day CD rates. This instrument, as we mentioned, is a 24-month instrument. And so it's a different tenure, it's a longer tenure. And we're not the government of Jamaica, so we're not going to be able to issue at their risk-free rate. But what it creates is an opportunity for folks to have their money in a savings account earning 1 or 2%. There's no point keeping your money in the bank earning 1 or 2% when inflation's 4 to 6%. You're much better off investing it with a trusted investment house like Mayberry Investments.
So how will the funds be used?
Yeah, so Mayberry uses it to secure our debt book. So we have over $8 billion in margin debt, over $4 billion in regular loans that we do to our high net worth customers, where our interest rate when we're lending out to clients varies from 12% to 15%. So we're raising funding at 10.25. That's my cost of funding. And maybe I on-lend it to my clients with a spread of 2 to 4 to 5%, depending on the particular client, etc. So this bond will be secured by our own loan book, where when we're lending money to clients, we maintain good collateral, good security, whether they're shares or real estate or other forms of assets.
Awesome. So how can people apply for this bond?
All right, good deal. So it is a public offering, and you can get at it either through bondberryjamaica.com or Mayberry's website, or through one of our participating selling agents, which includes JMB, and they're doing it through their Moneyline platform, or through Sagicor Investments, who are also doing it through their platform. So whether you want to come directly to Mayberry Investments Limited, go online, or go through Sagicor or JMB, those would be your 3 best options to get into it.
Okay. Thank you so much, Patrick. Thank you, Dan, for joining us.
Our
Thank you,
pleasure.
All the best, and all the best on your new offer.
Thanks. And it closes next week, Friday, by the way. So you still have about 9 working days to get in on it. We were doing $2.3 billion, and I'm happy to say we've hit that number, $2.3 billion, and we have the right to upsize by 50%.
So you're going for the
So
upsize now.
we're going to go for the upsize now. We've got $2.3 billion in interest. We'd like to upsize it if we can. So it's still not too late for folks to get in on it. We've got about 9 working days left.
Okay. Thanks once again. Well, up next, we've got your market recap, and the analysts are standing by. Time now for your market recap. The JSE combined index was flat last week. 127 stocks traded across the main and junior markets for the week ending Friday, February 14, 2025. 62 made gains, 54 lost value, and 11 stayed the same. 233 million shares changed hands on the Jamaican dollar market, valued at $639 million. Jamaican 8% preference shares was the week's most traded stock with 185 cents. Wigton traded the second most shares. The stock's price was unchanged at $1.25. And TransJam ordinary shares rounded out the week's most traded. It fell almost 2% to start the week at $4.03. Now let's see who had the biggest gains of the week. First Rock Real Estate USD was the top gainer, up 21%. ISP Finance had the second biggest gain, up 19%, and JMMB 7.35% cumulative redeemable preference shares rounded out the top stocks, up 16%. On the losing side now, 138 Student Living Variable Preference was last week's biggest loser. It fell 25% to open Monday at $231.15. AS Bryden USD shares fell 23%, and Pulse lost almost 16% to close out the week. Over on the Trinidad and Tobago Stock Exchange, the composite index gained 0.5% last week. Massey was the TTSE's most traded stock. It gained 2% to open Monday at $3.95 TT. West Indies Tobacco was Trinidad's top gainer, up 4.5% to start the week at $5.53 TT. And on the losing side, LJ Williams B shares fell 13% to open Monday at 65 cents TT. Over in the U.S., the Dow Jones was mostly flat last week, while the S&P 500 gained 1% and the Nasdaq gained almost 2%. At the pumps, gas prices rose by 25 cents last week, while diesel prices climbed 71 cents. In foreign exchange, it took an average $158.20 Jamaican to purchase $1 last Friday. That's 57 cents more than the week before. $1 Canadian cost an average $109.70 Jamaican. $1 British pound cost $200.32 Jamaican, and you could buy €1 for $166.21 Jamaican on average. Finally, on the crypto markets, Bitcoin prices fell almost 2% over the past 5 days, trading at $96,297 on Monday, while Ethereum gained 2%, trading at $2,793 on Monday. So, you've been supporting Taking Stock on my content all over social media for the past 5 years, and I can't thank you enough. Money Media has grown from just me in my living room with a cell phone to a full production team. And guess what? It takes time and money to bring you the quality show that you expect week after week. And we need your help to keep it going another 5 or even 50 years. Support us by subscribing to our Patreon at patreon.com/moneymediaja. The link is in the description.
Disclaimer. This is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back. Before we introduce our analyst panel, let me take some comments from the audience. Let's see what we got. Unbothered says the investment community, the investor community are awoken since the beginning of this week. I tell you. Antoinette says, one great team, great alignment. Welcome, DRT. Ryan says, good times and good people. We have Tavares saying, Mayberry always make raising capital look so easy. Unfortunately, a lot of others can't say the same. Unbothered said, Mayberry has the formula. Ha ha ha. Kish bigging up JMMB, saying Moneyline is very easy to follow. Unbothered says, Don is the super investor. We've got Ryan. Ryan says, good interview. Learned a lot about the deal in question. Congrats, everyone. Ryan being the lead arranger of said deal. Sherwin says, though it's not the government's responsibility, this is in response to the poll question, though it's not the government's responsibility, they do need to do more to protect future millionaires and billionaires. It's just a shame. And if the company is unable to pay, then the CEO must be jailed. We have Sean weighing in. Sean says the government needs to do more for all SSL clients, not just in getting back their money, but also ensuring that it won't happen again. And on that note, I definitely agree with you, Sean. I remember probably because it was January 2023. And within days, I'm sure by February, there was a statement by the finance minister, the then finance minister, Dr. Nigel Clark, outlining some measures that were to be taken, including extending JDIC to securities firms and a bunch of other things. And I haven't heard much of anything about any of those measures ever since. So we need to do some follow-ups and see what actually is being implemented to protect shareholders, because it's not their direct responsibility to make sure one investor is reimbursed, but it is their responsibility to ensure that we have a safer overall system, especially as securities trading and equities trading becomes more popular. Let's move on to our analysts now. It's time for the analysts. Let me introduce our panel. We have Taking Stock analyst David Rose, and we also have Julian is back. Julian from Wealth Watch JA. And Julian, you have a new role that you're going to be telling us more about next week as well. So welcome back, David. Welcome, Julian.
Night, Kalilah.
Thanks, Kalilah.
Yeah, looking forward to our interview next week because Julian, you made some big moves recently. You gone over to Novamed.
Yes. One step at a time, yeah, man. Looking forward to it as well. Thank you.
Okay, so David, I'm going to start with you because we have the breaking money news, and we heard that announcement that Dolphin Cove's parent company has filed for bankruptcy. So give us the update. What's going on?
So I realized that there is a little lag on my side, so I'll try and go a little slow because I see the internet kind of chipping in and out. So we saw this news coming out of Mexico, first from El Heraldo de Mexico, and then report to two Spanish-based publications, where they pointed out that the Dolphin Discovery Group, which is the collective name referred to the group of companies associated with the Dolphin Discovery Group, there was a reference to the main intermediate holding company being declared in bankruptcy for about $200 million US worth of liabilities. Now, we have not gotten additional clarification or information to provide further context. However, the market has taken some level of concern so far, and while Dolphin Cove stock price only went down by about 5% today on a closing price basis in terms of the VWAP, the stock itself halted down and hit a new 52-week low of 15.50. And based on my own checks, the volume traded today is the highest it's been in over a year. So
you're referring now to the local stock.
Yeah, the local Jamaican stock for Dolphin Cove. Apologies. So yeah, it's quite the development. So Dolphin Cove price tumbled down today, and it's a situation whereby you're not going to get perfect information. So someone in a Telegram group said, they don't use AI, and AI said, they didn't say that using. I'm saying to the person that, hey, AI is not going to pick up certain kinds of information when it is in a different language. So when I put in Concurso Mercantil into Google and I put in the co-founder's name, Eduardo Albor Villanueva, I saw multiple articles come up. And some of these articles referred to a development that, has been taking place in Florida with one of the Dolphin Discovery Group's, businesses. So Miami-Dade County, talking about the county in Florida, filed a complaint in the Miami-Dade courts, to evict one of the Dolphin Discovery Group's subsidiaries from operating at the facility in Florida. They filed a 324-page document, and this is public, by the way. You can go and check it out for yourselves. MSC Leisure is the name of the company. And what I saw in the document was quite concerning. And I'm just looking forward to see how this development plays out, because one of the things that I learned while reading, or preparing for this discussion was that Dolphin Cove's direct parent company, World of Dolphins, which is a Barbados-based entity, has pledged Dolphin Cove shares as security for a note purchase agreement on behalf of that same intermediate holding company. So I'm looking forward to just see, more information come out of Mexico to give some clarity, and I'll see where I can do my own research to discover more information, even in spite of the language gap that I will face.
I was admiring your Spanish accent earlier. Well, David, so what's like the worst case scenario here?
So there are two scenarios from the worst case angle. One of the worst case scenario angles is that the shares that the parent company owns in Dolphin Cove, meaning the ordinary shares, are sold on the open market or to another investor or to a group of investors, which can be a good or a bad thing, because on one hand, it might result in there being more liquidity for the stock, which is a problem in the sense that when you have fewer shares available in the market, when you add more shares to the market supply, you're likely going to see a depressed price or a reduced price. The other negative, which is another extreme, is that the creditors decide to do something called asset stripping. And, not talking about the taboo thing, talking a lot more generic. So when we talk about asset stripping, we're talking about, the creditors selling certain assets, like let us say they sell the Dolphin Cove resort itself or the property by, let's say, Ochures, for example, to a third party that would own the real estate, and they would, pay a dividend as the proceeds, or, potentially find other ways to sell assets in the business to recover capital through dividends or potentially other means to satisfy their obligations. So the intermediate holding company, we don't know how the debt is structured. So let me give some reasons why I have to explain that. If the $200 million worth of debt that is being referred to is only related to the holding company, that's a serious problem. If it's referring to $200 million worth of debt across the group of companies, it's bad, not so bad. Let me explain why. If it's across a group of companies, then the debt that is held at the parent company level might be a lot less, and it's easier to restructure or, sell off to another party. If it's just $200 million worth of liabilities owed to the parent company or the intermediate holding company, it's a major problem because that's a lot more difficult to address. And it's a little tricky because Dolphin Cove, paid out $3 million worth of dividends last year. About 2.6 million around that range was paid out to the intermediate parent company. They pay management fees as well. So it's very fluid, and I'm looking forward to seeing what the Dolphin Cove team says in the coming days, because they would have removed the founder and the chairman at the time, Stafford Burrows, from Dolphin Cove's board in December 2024, and they have not publicly announced a new chairman as yet. So there's just a lot of uncertainty with all of these developments.
So what should investors do now?
For me, I would just try and find information where I can and assess accordingly, because as it currently stands, you're in a space where you don't know what's happening, because most cases where creditors are trying to recover their money, they will potentially sell the debt to someone else, restructure the debt or something else, but you just don't know what's happening at the parent company level, and that's a very big problem. Because if creditors come in and start to, go extreme in trying to recover value, or depending on the scale and size of the issue at the parent company level, being problematic at the subsidiary for Jamaica, it comes to that point. So right now, I would just watch and see what information is coming out, because you just cannot make a truly informed decision when you consider the fact that there's no chairman that is known to the public right now. Most of us don't speak Spanish, and if we do know some Spanish, it's not easy for us to navigate Spanish media or source information to find out more information. And the final point is, while the JSC's regulator might request the company make a statement, the company might make a PR statement, which might not relieve some of the fears that investors have. So for me right now, I'm not trading the shares. I'm just observing and trying to gather more information, because when you're in an information vacuum, while fear is a time for you to be greedy and in this case buy more shares. If the shares that the parent company owns are sold to the market, then I might end in a potential loss as the price goes down with more supply in the market. So that's just the way to explain it.
Julian, what would you do in a situation like that?
Well,
on the
right
spot.
now, it depends on where you sit, because if you're on the sidelines, then that's one thing. But if you actually hold the security, that's a different situation. So if you are an investor, you would be keen to seek audience with management, to have a special AGM or a special meeting to address it, at least a press conference, because as a shareholder, you have a bit more influence on someone on the sidelines, given that it's actually your company, no matter how small the stake is. So beyond releasing information that would be generalized in a press release, it would be good if there was some more communication and dialogue with the shareholders to clarify and address certain parameters, especially in light of what David highlighted in terms of the language barrier, information vacuum, etc. But all I can say is it's not a good position to be in. It's not a good position to be in. You wouldn't wish that position on anyone.
Well, I hope they're watching and that they consider what you have suggested, because I do think that that's absolutely necessary at this point. We need more information, and shareholders need to have an opportunity to speak to management, to the board, and find out what exactly is going on and how does this affect my investment. Yeah. Sean wanted to know how this would affect dividends. Sean?
Dividends are not guaranteed.
Oh, dividends are never guaranteed, but Lanesra says they were milking Dolphin Cove to help cover their debt. So there's that. Disagree, David?
So, to put into context, Kalilah, dividends, are a reward for a company that takes a risk by another company. I wouldn't necessarily say it's a way of milking the company, but if, if one company decides to buy another company and has to finance it with debt, that it has to be paid, dividends, is one of the cheapest means in that case to pay on that debt. So necessarily milking the company, because at the end of the day, when they pay those dividends out, you as a member of the public could buy the shares and benefit from those higher dividend payouts. So it's like there was an unequal situation. You still benefited as a shareholder when they paid higher dividends overall.
So I need to move on, because it's at what, 9:03? Not bad actually on time. But money makers, please take out your pen and paper. because this next segment is Julian giving us his stocks to watch for 2025. And when Julian speaks, I make notes. I take notes. So, Julian, you have been watching stocks. As you see on your shirt there, you have Wealth Watchers. So, are you watching the money? What are your stocks to watch for 2025?
Okay, since we're running out of time, I can't go in as much detail as I would like, but
Come on,
I'll
go
try
through.
and condense. So, number one is Fontana. The PE is 20 times. The return on equity is 19.3%, which means that it's a company that's growing fast. So what you find is that faster growing companies will have a return on equity or ROE that is above, say, 10% or 12%. If it's in the high teens or above, it signals high growth. In most cases, of course, it can have extraordinary circumstances, but this isn't one of them. So the company has a strong franchise. It's growing both organically and inorganically. So that means that the Portmore expansion would have been organic because it's from core assets. But with the acquisition of Monarch and the integration of Monarch's assets into Fontana, that would be inorganic, meaning that it's new assets snapped on to what was there before. There are defensive products and which are highly scalable, and the company has an attractive balance sheet. So they had over 800 million Jamaican dollars in debt for years. And they have managed to control how much debt they had. Did I say that a while ago? I meant cash. They had over 800 million Jamaican dollars in cash, yes. And they've been able to manage their debt relative to the book value. So it means that the company has significant discipline around not just growth, but having the right mix of capital and keeping the right mix of cash within the business so they can be flexible to make moves like the Monarch move. So that's one. Next, Scotia. I have Scotia at 8.8 in terms of the PE, 8.8 times. The return on equity is 14.6%. And even though it's not as high as Fontana, it's still acceptable for a large entity such as Scotia because larger companies are not as easily to grow quickly. Scotia is hundreds of years old. It is a market leader in many business lines, and some would say as a group, it's doing much better than its peers in terms of quality of capital that it has. Now, why is capital important? Now, capital gives a company flexibility. So, for instance, in the last 2 financial years, when interest rates were not falling, but they remained elevated for an extended time in our market, many entities that were lending could not negotiate the interest rates that they were able to do in previous times, like in COVID times and when interest rates were falling. So what happened is that as a result, many of the clients defaulted, and that would have hurt the balance sheets of these financial institutions. So when you lend and you have a lot of the persons borrowing from you, defaulting on their loans or paying you back late, what it does is that it puts you in a difficult position. And Scotia, because they had a stronger balance sheet by way of its capital, the quality of its capital, they were able to grow their loan book quickly and with greater ease, and they were in a better position to absorb some of these challenges around loan quality compared to their peers. And a large part of their competitors' mortgage portfolio actually migrated over to Scotia because Scotia was in a better position to bargain or allow their clients to bargain, and that caused net interest income to grow, which is the spread, and it's a major business line for the business. Instead of just hoping for interest rates to fall and saying Hail Mary. So that is why I'm bullish on Scotia. Another one is Last D. Last D has a PE of 11.88 times, and the return on equity is 12.7%. So it's almost self-explanatory, but I'll still go over it. Robust brand loyalty. It has cheap products, they're affordable, and they're also defensive. So these products don't reduce their sales significantly in a recession, for example. And there's talks that Jamaica has an economy that's contracting, and it's likely to continue for the first half of this year, according to several experts. So that's a company that investors can monitor, because pharmaceutical products and the type of food products that Last D distributes can withstand conditions like that. Like Fontana, it has a strong balance sheet, very low debt, very high cash balances, and it also has a very strong amount of brand loyalty. The next one is Last M. The PE is 12.45 times. Return on equity is higher, 18.3 times, which is also impressive. It has the same advantages as Last D, but what's interesting about Last M is that its exports are largely untapped in terms of the portion of revenue that's generated from external markets. So that is a possible catalyst for the business. If they begin to export to a larger extent, it means that they could, one, earn some US dollars, and two, scale even faster.
But would
Especially
would Last M do those exports directly, or would it be Last D doing the exports on behalf of Last M?
It would be a paired benefit. So definitely Last D would be the distributor. So I could make the same case for Last D. But Last M, because they're the manufacturing entity, they would actually be able to see the profit margins improve as well, because they're the one manufacturing the product. So they would be manufacturing the cheap inputs in J dollar and earning US. So they would gain better margins as a result, all being equal. So both businesses would benefit from that. And the last one, but not least, is Cygnus Credit Investments. It has a return on equity of 12.35%. The PE is 4.95, which means that it's very cheap. In terms of the book value, I know it's trading below book value, meaning that if you were to divide the net worth of the business by the amount of shares, that is what the book value per share is, and the company is trading below that. The discount is more than 25%, which is significant. So it's very cheap. I know that Cygnus has a very agile business model, because in the Caribbean, most businesses are funded by traditional financing sources from banks. And what Cygnus does is that they provide more customized credit solutions to these businesses that are growing quickly. And because these businesses are getting customized credit, they can grow even faster. So, yes. So the company has a hardworking team. They have a strong franchise model, and they have high demand relative to supply, because there aren't many companies offering this flexible type of financing.
So to summarize, Fontana, Scotia, Last M and Last D, and what's the last one you said again? Cygnus Credit Investments. Stocks to watch for 2025. I see a few questions in the chat. Let me see.
Well, wait. Actually, in terms of PE, the Cygnus is trading at a big premium, actually. But in all fairness, companies like Cygnus that are largely structured as a fund, they're better to assess in terms of book value. So the
they
price
did do a share buyback. They did do a share buyback last year. So
yeah, so the price to book might be more.
Premium.
Yeah, the price to book is actually more fitting in terms of a valuation method, and it's trading way below book value. I remember the discount being more than 25%, and it sat there for a large amount of time. Most of its life has been trading at a discount, which is why they did a share buyback. And the dividend, we all know persons love Cygnus for the dividend, Cygnus Credit Investments for the dividend. So great dividend opportunity. So is Scotia, so is Fontana. So these could give you a mix of dividend and growth, especially the ones apart from Lasco. Lasco is mostly growth, because they tend to keep the cash to reinvest to grow the business quicker. But the others are more generous with the dividends.
We have a few questions and comments in the chat. Shell says, 2 years now, the experts telling us Fontana will be over $10.
Did I say Fontana was going to be over $10? And over
Maybe
what
I
time
don't know. I
period?
don't remember if you said it, but I guess that's
Yeah,
what
it
she
came up.
said.
It came up during my discussion, but I don't remember saying that. I don't remember saying that on the show. I don't
You never
remember
did.
saying that. Yeah, so I don't really know how that drop in, but okay.
But Fontana, what's about $10 like probably not last year, the prior year, but
Yeah,
it was at
I
$12.
was looking at Fontana recently doing some research. Their high has been 1130 something, I think.
It was over
Yeah,
12.
yeah. Actually, the last time I checked, the stock is down 10% from its 52-week high. Most of these that I mentioned are down from the 52-week high. Scotia is down 10.9. Lasco is down 20.7% from the 52-week high. Last M is down 11.4, and Cygnus is down 7.4 in terms of where it is now relative to the 52-week high. And I'm using Jamaica Stock Exchange data. So I mean, it's not just that they have the fundamentals there, but they are down for the most part double digit in terms of the level relative to the 52-week high. So we're considering, especially from a dividend standpoint.
A few people are commenting on the PE that is shared. Stronglink says the PE sounds high to me, that he was referring to Fontana. Stronglink again, PE sounds good for Scotia, could climb to 12, but very conservative. So because of this discussion on PE,
I agree with you. I agree with you, Stronglink.
But because of this discussion now, we have Natoya wanting to know, well, what is considered a low PE? Like, what do you do with these numbers when you hear them? How do you assess it and know if it's good or bad?
All right, so two things. 'Cause I know David going to jump in, which is of course welcome. But so let's look at what a PE is. There's a price, and then there's the E, which is the earnings per share. So the earnings per share is how much has the company generated in the last 12 months from a net profit after tax standpoint divided by all the shares. So it's just earnings per shares, and earnings is another word for net profit after tax. So what we try to do is to find companies that are earning more relative to where it is trading. That's what we use to ascertain whether or not a stock is expensive, because a stock can be $1 and have a PE of 20, and a stock can be $20 and have a PE of 5. So what you find is that the $20 stock is cheaper than the $1 stock, because relative to its earnings, they give us a different perspective. Now, in terms of the PE being high now, two things. We tend to compare PE relative to market average and sector average, or if it doesn't have a sector average, the closest comparable pair. So if you find that you are comparing 3 banking groups, and three of those entities in the sample are in the high teens, let's say 18, 17, and 19, and then there's another one that's trading at 12, then the one that's 12 has a low PE relative to its peers. But we shouldn't just compare that in a vacuum. Is it that the companies that are having a higher PE are more popular, and the ones that has a lower PE relative to its peers are less popular? So what you find is that persons may trade what they know, and because of popularity might trade higher. So what some investors try to do is to find companies that are overlooked by most market participants, and as a result, they may not trade like the rest of the other stocks, and they might be cheaper, but they have good fundamentals, such as the dividend yield, and every now and again the stock will see some upside because of the cheaper price. So just from a numerical standpoint, a PE of 20, 30, 50 tends to be on the higher end, while PEs of 15, 16, 8, 5, those are outliers in terms of the cheaper side, especially the last figures that I gave you, single digit, especially for companies that face consumers like the Lascos of the world, the Fontanas of the world. These are trading companies. They sell products and services. They have high asset turnover. But when you have companies structured like a fund, like a Cygnus credit investments, then you might not find that that valuation method is as comparable, because really and truly you're focused more on what is called the net asset value or the book value. So you look more at book value per share, because it's not a trading company. They don't face customers the way that Fontana does, for argument's sake. So the asset turnover is less, and that's going to bias the type of PE you get. So we really have to match the methodology with the type of company that it is. So what you find is that whenever you have a listed fund, you should focus more on the PB valuation, price to book, versus PE, which is better for assets with higher asset turnover, entities that are trading products and services, for example. So yeah, hopefully I answered the question and it wasn't overwhelming.
I think you did a great job. Great insights, Julian. Thank you so much.
I guess.
Thank you for the opportunity. David, you're not chiming in?
I was gonna wrap up, but I left a little space for David to jump in, because he always jumps in right when I'm trying to wrap up. So
I'm
David,
not going to be long. I'm not going to be long, Kalilah.
All right.
So, there are different ways to look at it, but I look at the Scotia example as a reference. Scotia's earnings per share, based on their recent audited numbers, is $6.48, right? Scotia was trading up to around October, November at $38. Based on that earnings per share figure, they were trading at around 5.9 times. And it's gone from $30 at that point in time to now $57. Now, to add into perspective, we're talking about 50% increase in the stock price in quite less than 6 months. And yet the earnings per share is not 8.8 times. So the earnings per share kind of gives you a gauge as to, how the market is viewing the company from its earnings standpoint vis-a-vis its earning capacity. And when you combine the fact that, this is a company that is relatively holding on to more cash and is still aggressively growing, then you kind of get this sense of, hey, this company might be severely undervalued in what you call a distressed or the relatively slow economy. So, back in 2019, I was one of those persons, when I was still learning, saying, hey, why is NT over $200? But at the time, based on, its earning capacity at that point in time, in 2019 time, it would have been around 20 times earnings. And, that's $200 per share. So that's to kind of show you that at that point in time, the valuation made sense. Now, in what you call a relatively slow economy, where most firms are, either seeing slow business or, steady state increase, for Scotia to be delivering this kind of return, and, hopefully we expect Jamaica's debt to GDP to continue to decline and Jamaica to really take off. Then if Scotia was to, let us say, trade at 15 times, you're talking about a $90 plus stock. If you just multiply 15 times by the 6.48 figure. So that's just, one insightful way to use, the PE to gauge the potential future price. But everybody has to, assess their risk appetite accordingly. And, Julia mentioned Cygnus a while ago, and I would look at Cygnus from a PE perspective. You mentioned PB, and even me, if I am looking to build up a steady state US or dividend paying stock, I wouldn't mind Cygnus, because recently Cygnus trading down at 0.06 US cents. 0.06 USD, and based on the recent dividends paid out, that translated to a 9% dividend yield, and that's tax-free. So for me, in this time of the market being down, as we've heard for the last 5 years, there are good assets that you can purchase that are going to fit a part or aspect of your portfolio that you potentially want to fill. So that's me.
You kind of shocked me when you said the market's been down for 5 years, and then I did the quick maths and COVID was 5 years ago. Wow, how time flies. Just before we wrap, let me take this comment from Limitless Podcast, who said, also factor in the projected PE, because you might be willing to buy at a high PE now if the earnings can grow and eventually bring the PE down.
Bingo.
So yeah.
As in the case with Fontana, because when those earnings chip in, or when those revenues come into the fore, and they find a way to integrate Monarch into organic Fontana assets that were there before, the expectation is that the PE will fall, all else being equal, because the earnings will rise. So if earnings grow faster than the price rises, that means the PE drops. So that's a buying opportunity for some investors.
All right. Thanks again, Julian. Thanks, David. We'll take our final break and come back with the wrap. 12 months. That's all it takes to transform your finances with Money Mission Premium. For the next year, I'll guide you on the process to take your finances to the next level. You'll get my premium courses, monthly mentorship, and a great community of peers to help you on your journey. Go to moneymissionja.com. Let's get this money.
Let's get this money.
Welcome back. I see Limitless asking if we're still discussing ISP. No, we actually had to make some last minute adjustments because we had this breaking news with Dolphin Cove. So we flipped out that discussion for Dolphin Cove. We were also supposed to discuss dollar and ISP. Perhaps we'll do that next week. I'm not sure yet. It depends on what happens next week, because today was just such a heavy news day. So many things happening. 1GS acquiring DRT. And thanks to Daniel and Javane for coming on and busting the news on taking stock and giving us the first interview, because that announcement just came out a few hours ago and we already have the interview. So yeah, I feel like we did. Tonight's show was really good. I really enjoyed all the discussions that we had tonight, fulfilling the purpose, the original purpose of what this show was created for, to look at what's happening in the market, speak to company leaders about where their company is heading, discuss mergers and acquisitions, discuss investment opportunities. We had the Mayberry bond, we met Mayberry's investments, new CEO, and then we looked at the impact of things like Dolphin Cove's parent company filing for bankruptcy. We also we had a discussion on PE. Like, tonight's show was really so rich, and I appreciate everybody who's helped to make it possible. Our analysts, David and Julian, Dan and Philip from Mayberry, and of course, like I mentioned, Javine and Daniel from DRT Communications. I appreciate you guys for asking the tough questions as usual as well. You make this show a lot more engaging and a lot more fun. Next week, Julian will be back. He's going to be talking to us about his new role over at NovaMed and what NovaMed has in store. The last time I spoke with NovaMed was during COVID. I remember they made that investment in a Chinese mask factory, which was like 4 or 5 years ago. And I'm very curious to see, where they're headed now, what they're doing, what plans they have in the works, maybe an IPO. Speaking of, some little birdies are whispering to me. I shall say no more. Early as next week. Yeah. Let's see. Let me take some final comments from the group. Tavares says, Julian didn't pick TJH, Trans Jamaica. I feel like TJH is like the obvious. Everybody at TJH has a whole fan club in the comments section of this show. Roswell says that's why it's important to take a medium outlook most times, and some stocks go up 45 cents on the dollar, especially the junior stocks. Ryan says, I think investors are speculating a stock split for ISP and sending up the price. Didn't they report some loss on their last quarter? What else we have here? Who else we have? A lot of people here in the comments. Earl commenting that, will Dolphin Cove news shake our stock market? And what will the local company that have stocks like banks do, I guess is the question. I feel like the activity we saw today, because the news, not everybody has heard the news yet. I just heard about the news just before we came on the show. I saw, oh, okay, Dolphin Cove, big news. And so there are people, I think the market hasn't fully reacted how it intends to react yet. So David mentioned that we did see that. I think it's a 5% price dip today. I think tomorrow we're likely to see more movement. But we await word from the company. Hopefully they have that press conference, as Julian has suggested, so that we can learn more about what is going on. Let me see if I'll take any other comments. Oren says TJH Army strong. Love to see it. All right. Well, thank you so much, everybody. Appreciate your presence. Make sure that you follow us all over social media. Our Instagram page is now up at Money Media JA. So follow at Money Media JA on Instagram. Subscribe to this channel if you haven't done it yet, or at least, at the very least, hit the like button so that YouTube knows, the algorithm knows you like this video and can show it to you again, push it in your feed. Share the video with a friend. Subscribe to the newsletter at getmoneynews.com. That's getmoneynews.com for all the latest breaking money news, investment alerts, IPO alerts, etc., etc. And I'll see you here again next week. Until then, stay safe and let's get this money.